Hello and good afternoon. We're here with everything that you need to know right before the stock market rings the bell. Microsoft Corp posted its weakest quarterly revenue growth in 5 years, throttled by the surging US dollar and a slump in sales of Windows software to personal computer makers. Sales in the first quarter, which ended September 30, rose 11% to $50.1 billion. Net income was $17.6 billion or $2.35 a share. While both numbers topped analyst average estimates, revenue from Microsoft closely watched Azure cloud computing services descalated to 35%. Excluding the impact of the rising dollar, Azure sales rose 42%, below some predictions. Demand remaining strong for cloud services, with Office 365 sales to businesses performing slightly better than expected. The total cloud revenue in the period rose 24% to $25.7 billion. After reporting earnings and revenue that missed expectations, Google parent Alphabet said on Tuesday it would slow hiring and control expenses, signaling that it was bracing for tough times ahead as the economy flatters. Google's advertising juggernaut, which had largely dodged the digital ad slowdown, is no longer immune. Alphabet said third quarter sales, excluding payments to distribution partners, were $57.27 billion, compared with an average analyst projection of $57.18 billion, while net income was $1.06 a share, less than estimates. Shares fell more than 6% in post-market trading. Elsewhere, while Google's cloud offering unit has yet to turn a profit, the cloud business is nonetheless viewed as one of the company's best bets to grow as the core search business matures. Spotify technology tumbled as much as 10% on Tuesday after the music streaming giant said profit margins may narrow this quarter due to programming costs and potential price increases in the US. Earlier, Spotify reported that third quarter ad revenue increased 19%, but said sales were slower than expected due to a, quote, challenging macro environment. The company forecast a gross margin of 24.5% in the fourth quarter and an operating loss of €300 million, both below consensus expectations. The company further reported 456 million monthly average users for the third quarter and also surpassed paid subscriber prediction, totaling 195 million. The sell-off shows how investors have become more focused on whether Spotify becomes profitable. Third quarter revenue reached €3.04 billion. This is it. That's all we have for you today. Soon Wall Street bells will ring and a new trading day will start. We are MEXEM TV and we will be here tomorrow, same time, same place. Goodbye.